One area of continued growth is large single-family home rental development. So significant capital still flowed into this niche in the first quarter. Often the high population growth areas and markets with ample available land. I mean, even in my area, you're seeing a lot of what used to be farmland is now just completely being converted. You have investors and developers in single-family rentals. They're capitalizing on this unmet demand for housing with the product that offers attractive returns. So overall, as has been the case, there are strong long-term fundamentals in the multifamily industry and should continue to outpace other commercial real estate sectors.
Welcome to BuzzHouse, a Baker Tilly podcast where you can hear all the buzz around multifamily housing, with all the info you need to help you win now and anticipate tomorrow. Hi, I'm Don Bernards, the partner in charge of Baker Tilly's multifamily housing practice.
And I'm Garrick Gibson, a partner at Baker Tilly, also specializing in consulting on multifamily housing transactions across the country.
Let's get started. For today's episode, Garrick and I will be giving an overview of Baker Tilly's first quarter commercial real estate market report, of course focusing on the multifamily segment. The report is led by our business partner, Brent Mayer, and thank you, Brent and his team, for producing this report, quarterly, of course. Before Garrick and I jump into our discussion, I have a couple of news updates from around the industry. The Environmental Protection Agency, or the EPA, announced 60 selectees under the Greenhouse Gas Reduction Fund's grant competition to deliver solar energy assistance to more than an estimated 900,000 low-income and disadvantaged households. The $7 billion Solar for All grant awards, authorized by the Inflation Reduction Act, which Garrick and I have talked a lot about over the last year plus, will provide funds to states, territories, tribal governments, municipalities, and nonprofits, some working in partnership with state HFAs to create sustainable programs to install rooftop solar, as well as build community solar facilities that benefit low-income communities and households. So again, for all of you affordable housing developers, in addition to just the credit for the investment tax credit under the 48C under the Inflation Reduction Act and the increased benefits for the solar credit, now look at Solar for All as a potential to kind of round out your capital stack for solar being added to your projects. In additional news, HUD announced more than $12.7 million for housing assistance to young adults transitioning out of foster care through its Foster Youth to Independence initiative. And this is just an area that I've seen more and more, and just there's so many niche areas in our industry, of course, but youth aging out of foster care is obviously a significant hurdle for those individuals. The Foster Youth to Independence initiative, or FYI, provides housing choice vouchers to public housing agencies in partnership with public child welfare agencies to help mitigate the heightened risk of homelessness these young adults aging out of foster care experience. The vouchers will be targeted to young adults between ages 18 to 24 who have left foster care or will be leaving foster care in the next 90 days and are experiencing or at risk of homelessness. HUD anticipates this round of funding will support grants to 20 public housing authorities, and the deadline to apply is June 17th. So if you're a housing authority or a developer interested in this niche area, please find a PHA, Public Housing Authority, to work with to apply for these fundings. Now, Garrick and I are going to jump into a summary of the first quarter Baker Tilly real estate reports. Garrick, like we've done the past couple of quarters, could you start out summarizing the general economic overview before we jump into the multifamily segment?
Yeah, sure, Don, and thanks. Look, when looking at the unemployment rate, the biggest takeaway is that employment remains robust, with employment continuing at a very healthy pace since mid-2021 and are still historically low at a little under 4% while looking back at the last 75 years. And regarding inflation, the Fed has held fast to their stated goal of 2% annual inflation, and the first quarter did not demonstrate meaningful progress toward achieving that goal, actually, with a CPI increasing 1.13% for the quarter. That's more than 4% annualized rate. The Fed has not seemed overly alarmed at the inflation numbers, which saw the largest increase in energy sector related to fuel, oil, and natural gas. Core items such as food, which was with an annual inflation of 2.2%, and medical care services, 2.1% 12-month growth rate, are at health levels, right? So During its May 2024 meeting, the Fed Reserve unanimously voted to hold policy rates steady for the sixth consecutive time, leaving the federal funds target rate unchanged at 5.25% to 5.5%. I know at least people were looking for some type of movement there, but it doesn't look like that's going to be the case.
Right. And we'll get into that a little bit later, I think, when we get into the multifamily segment. Garrick, something also we've kind of focused on is construction pricing, right? We look at what are the major components of our real estate multifamily development budgets. So obviously some things in operations, but construction costs. What does the report kind of talk about construction pricing for the first quarter of 2024?
Yeah, sure. So in the first quarter of 2024, construction costs, as measured by the BLS index of materials and components in construction, continued to grow slower than overall inflation, with the index increasing at an annualized rate of 1.69%. So, Don, I think that is actually welcome news to the development side of the business. As you and I know, we were always looking for some slowdown in that particular index there.
Yeah, and I think anecdotally, Garrick, I think we've seen, right? I think the numbers for all of these kind of same numbers for all of 2023 were only a little above 1%. We're, now 1.69. And I think we've seen that working on many deals around the country. I think we're seeing kind of the slowdown or leveling out. So we'll see how that continues into 2024. Garrick, just maybe a final, maybe question, comment around the general economy. How does the report characterize the overall economy? I know we've talked about recession. Is that still there? What do we see there as the final conclusion here in the first quarter?
Oh, well, obviously we can't have that conversation unless we talk about stock market, right? And so the stock markets carried a strong, 2023 performance into the first quarter, posting broad-based gains behind optimism for an improved capital markets environment. I think everybody's looking for that. The S&P was up 11% for just the first quarter. So while some would have hoped for a rapid reduction in borrowing costs, the concerns over recession have largely abated, and the stability has provided confidence overall to institutional investors. So hopefully that keeps tracking.
That's good. It'll be interesting, Garrick, to see, like you had mentioned, this optimism for improved capital markets. If, the Fed kept its rates unchanged for the sixth consecutive, will that impact, kind of people's views? But right now, stability seems to be the key word. Garrick, let's switch over to the multifamily sector. What is noted in this our quarterly report around this real estate sector at large?
Look, Don, if you have capital available, right, the current environment could indeed be opportune, right? Valuations of multifamily assets have declined in part due to fundamentals. Operating costs, as we have discussed in the past, have risen, most notably for insurance, which in some places have gone up, several 100%, while rents have been trending downward in a number of markets. We may have turned the corner, however, as the latest information from Apartment List indicates that rents increased 0.6% in March. Over the last 12 months, however, year over year, there's been a 0.8% decrease. The report also notes that vacancies they've continued their slow climb and will likely increase more with new supply chain coming online in 2024. Not so necessarily much in the affordable space, but these vacancies are expected to reach the highest levels in decades. Note that national data gives a sense of this information, but important to note that these fundamentals display extremely wide variance by market. Yeah, and the only reason why I mentioned the affordable space, it seems like their climb is a lot faster, right? So just want to note that.
Yeah, no, that makes a lot of sense, Garrick. Garrick, how would you summarize the takeaways from the first quarter, regarding the multifamily market? I know one thing you and I saw, again, was a 10-year treasury increasing throughout the quarter, with interest rates on various debt products, increasing quarterly. So the need is there. We know the demand is there. We know there's still, like you mentioned in your last note that, generally we saw an uptick in rents overall across the country. What would you say? What are some takeaways?
Well, Don, one area of continued growth is large single-family home rental development. So significant capital still flowed into this niche in the first quarter. Often the high population growth areas and markets with, of ample available land. I mean, even in my area, you're seeing a lot of what used to be farmland is now just completely being converted. You have investors and developers in single-family rentals. They're capitalizing on this unmet demand for housing with the product that offers attractive returns. So overall, as has been the case, There are strong long-term fundamentals in the multifamily industry and should continue to outpace other commercial real estate sectors.
Garrick, one last question around, just generally commercial real estate debt markets. It's interesting, and I think you'll have a comment on this. You think about a lot of deals, maybe they went under construction, were based on, interest rates in like 2021 into 2022, where we had historically low interest rates, right? Across many commercial real estate asset classes, especially multifamily, with higher rates than most were expecting at this time. What does the report kind of discuss around the climate for reserves, write-offs, anything we should be thinking about?
Yeah, I mean, obviously there's a lot of detail here, right? So according to a January 12 Bloomberg article, Bank of America and Wells Fargo continue to write off office loans, and JP Morgan Chase is setting aside additional reserves related to commercial real estate, right? So the S&P stoked the flames of CRE loans by lowering its rating of 5 banks due to their exposure to real estate. So we'll obviously keep watching that. So also, it is reported that there are $214 billion in commercial real estate loans that were extended in 2023 to 2024, with a majority of these originated in 2021, where we saw very low interest rates. In January, WS Communities, a major landlord in the Los Angeles market, handed over deeds to 28 multifamily buildings that had $1.1 billion in debt. So we'll keep our eyes on this. And, it's not that it wasn't expected. Now we've had this conversation where it was sort of leading into this because of that's just such an increase in interest rates over that small amount of time.
Yeah. And I know we saw a lot of deals, right, maybe constructed in 2023, late 2022, that we're thinking, right, and I come out of construction and stabilization and my rate will be down in the 5s or something, not up in the 6s and 7s. So I think we'll see a lot of deals, especially again, I think there's mechanisms, it seems, on the affordable side and probably underwritten, but where we're able to do a forward rate lock and so forth. But for those maybe market rate workforce deals, we probably could see some deals kind of struggling to convert and stabilize with higher than noted interest rates. So,
well, the good news is that whenever I hear the word stabilize, it seems like the only place it goes down. So we've already went up. So
very good. Very good. That's it for this episode of the BuzzHouse. Garrick and I enjoyed walking through Baker Tilly's first quarter commercial real estate market update. Once again, I'm Don Bernards.
And I'm Garrick Gibson.
Don't forget to subscribe so you don't miss an episode. For additional resources around multifamily housing, check out bakertilly.com. If you have a suggestion for the show, email us at build@bakertilly.com. That's BUILD @bakertilly.com. See you next time on BuzzHouse.